At the same time, you might end up in thousands of debt, even up to $100,000 in some cases. Then realize that you owe the government enough money to buy a Tesla, and you're going to spend the next decade of your life paying it off. Hey, what's going on, people? Today's video is about HECS-HELP debt, also known as HECS. This is the Australian version of student loans for university and private institutions, where the lender is the Australian government. In this video, you'll learn how to check how much it will cost you to study, how interest works on HECS loans, how to check your current loan balance and transaction history, and overall give you more information on if studying is the right decision for you. I should preface this by saying this is not financial advice, and I'm not a financial advisor. Information in this video is generalized and publicly available knowledge. So a little bit about the history of tertiary education in Australia first. Did you know that the university fees were actually abolished by the Whitlam government in the 70s? From 74 to 89, the government footed the bill and even paid students a living allowance. Then during the Hawke government in 1989, after realizing this was becoming expensive, the government brought back the university fees, but created the Higher Education Contribution Scheme, also known as HECS. So students were still encouraged to study without having to pay upfront. Students make repayments once they hit a certain income threshold for the financial year. Another acronym that is usually followed by the term HECS is HELP, which stands for Higher Education Loan Program. There is also another HELP loan that you can attain for education. This is known as fee help, which is generally what you'll get if you're not able to pay for your TAFE upfront. Many would agree this is a smart way of handling tertiary education, as students can study as much as they wish, and everyone that's in a Commonwealth-supported place is treated the same. Whereas in the United States, student loans aren't lent by just the government, but the institutions themselves, and also private organizations. The amount allotted to a student doesn't depend on what or where they are studying, but the amount that they or their family are able to repay. There's also different loan types and repayment methods in the US, but for now I'm just going to focus on Australia. The average Australian in their 20s has around $30,000 worth of HECS debt as of the financial year ending in June 2023, according to the Australian Tax Office. This obviously takes into account some students that are partway through studying their degree, as well as those that have graduated and are slowly paying them off. Studying in some fields can leave you in debt of up to $100,000 in some cases, depending on how far you take your studies and the particular degree or field, with the maximum loan amount for a non-medicine student in 2024 sitting at $121,000. I should also add, this is not a video to encourage nor to discourage studying at university, merely just providing information on it, as a lot of people that I've talked with aren't very educated on the matter and haven't given it a lot of thought. How much will it cost you? This depends on what field you study, where you study, and how long you study for. Also, if you fail any subjects and have to redo them, or you dropped out of a subject after census date, then this will also be on your HECS debt. For now, we'll focus on undergraduate education, so basically those studying their first degree at a university or college. I'm also only going to refer to costs for those in a Commonwealth-supported place. Basically, if you're a citizen or permanent visa holder doing an undergraduate course at a university, you'll be considered in a CSP. This is something that you'll need to look into yourself to take into account your residency status, what degree and level of education you're likely to study, and at what institution. In general, it's also worth considering if you want to do an honors project, or if you happen to need a level of postgraduate education. For example, if you want to be a psychologist. University subjects from a cost perspective are broken up into 4 bands. Each institute will charge their own amount per band. They're roughly in line with each other, but might differ slightly. Here's the fee setup for University of New South Wales, which is a well-known institution here in Sydney. As we can see, business or law-related subjects fall under the highest costing band, band 4, whereas health is a band 2 and education is a band 1. Generally, the more a profession has demand rather than supply, it's likely to be on a lower band and thus cheaper, encouraging people to enter that industry. You can also argue that higher band industries have a higher earning potential, but this isn't always true. I'll dive into a few examples across 3 different universities within Australia to see how much a degree will cost. If you were to study a Bachelor of Secondary Education with a Bachelor of Arts at UNSW starting in 2024, it would cost around $9,500 a year, or around $33,000 for the full degree. This is a 4-year full-time course. As with education and teaching degrees, you also need to hold a degree in something else. So in this scenario, you graduate with 2 bachelor degrees in a sense. This would be the study needed to be a history teacher in a high school, depending on the subject selected. Given the full figure of $33,000, some of the subjects must be in a higher band, with the majority I would expect falling into band 1 cost. Another example is nursing at Western Sydney University, which is a 3-year full-time course, 4 subjects a session, which is pretty standard. except only 3 in the final semester due to placement, so around 23 subjects in total. WSU doesn't provide an easy rough number on their website, so as an estimate, if we assume all 23 subjects belong to the nursing band, of which is band 1, the full course cost would be around $13,000. I could be wrong here, but this is an estimate based off the information I can see on the course guide and on the website. A final example of studying a Bachelor of Science in Information Technology at UTS. Note that for this degree, UTS makes you enroll in something called a Diploma of Professional Practice, basically making you find industry experience before you graduate. So there is a minor cost associated with this, as it adds 12 credit points to a normal IT degree. This is actually what I studied at university, and I was able to transfer out of the diploma before graduating, as this was a complicated process, but you might not be able to do this anymore. The UTS website does have a course fee searcher. However, it's basically telling me all of the IT degrees are subject dependent, which makes sense. I studied some subjects that were considered engineering instead of information technology, and a potential student might use their electives on humanities or business related subjects, thus altering the final cost. As a reference, assuming that all subjects are under band 2, as they're computing and or engineering related, a full year is $9,314. Meaning if we included the 12 credit points for the diploma, this is around $30,000 for the full course, 3 years of study and 1 year of industry experience. One important thing to note is that universities can change their fee amounts from year to year. Whilst performing this research, it seems that students starting in 2025 will be generally paying for higher fees than those that started in 2024 or before 2020. Should also mention, universities charge a student services and amenities fee, and you also might need to purchase textbooks, lab coats, or a laptop, for example. One thing to note as well, which is probably something that you're not thinking about if you're watching this video and about to study, but having a HECS debt is likely to impact your borrowing capacity for a property loan, similar to if you had a loan for a credit card or car or an existing mortgage, which is something that you'll need to speak to a mortgage broker about. But it's also food for thought for anyone thinking about or desperately hoping to purchase a property in the near future. A common question and misconception about HECS-HELP loans is there interest on the loan? Essentially, it's not interest, but there is something called indexation. This adjusts the loan amount by a specific number calculated each year, traditionally to keep the loan in line with inflation and the cost of living. Previously, the Consumer Price Index, or CPI, was the only factor used to judge the indexation rate, but recent legislation is trying to change this to be the lower of the two economic indicators, the Wage Price Index, known as the WPI, or the CPI. As the indexation rate reached 7.1% in 2023, this sparked some outrage. Just because a basket of goods costs more year on year doesn't mean that wages are rising by the same amount year on year. So this new legislation is trying to balance this out from the HECS loan perspective. As of 2024, the indexation figure is around 3%. Throughout the course of my studies, the indexation figure was around 1 to 2% on average, but this really depends on the current economic situation. On the 1st of June 2023, there was around $74 billion owed to the government in student loans, which is no small sum, and if no indexation was applied, the government in a sense would be losing money as a lender due to our monetary system being inflationary. Leave a comment if you want me to make a video explaining our current monetary system. Now let's talk about repaying the debt.
Where's the money? When are you going to get the money? Why aren't you getting the money now? And so on. So please, the money.
When you earn more than $54,435, current information as of the financial year 2024-2025, some of your earnings through your pay will be withheld as tax to go towards repayments for your HECS debt. The amount of your repayment increases in proportion to the more you earn. You can check out paycalculator.com.au to give you some rough figures on how much will be taken out in a given financial year, if you know roughly how much you make income-wise for that financial year. Let's say you're a graduate and earn $70,000 as your overall taxable income for the 2024-2025 financial year, not including deductions or complications, you will roughly pay $1,750 towards your HELP loan. I really like this tool from PayCalculator, as it's helped me figure out how much I owed towards my HECS loan for tax one year, where I had just gotten a pay rise partway through the financial year, which put me over the threshold. And I also had a second job, and I don't remember if I updated my tax form with them to hold more of my pay for tax, given that I might reach over the HECS repayment threshold. More on second jobs and if they're worth it in a video coming soon. So please subscribe if that's something that you would like to learn more about. It's important to note that you can make voluntary repayments towards your HECS loan at any time. Information can be found on the ATO website on how to do this. These transfers can take 1 to 2 weeks, so if you're trying to reduce your HECS debt before the indexation date, please take this into account. How much am I better off paying the loan off sooner or leaving it to come out slowly as I start making enough money to pay it off and slowly increase my earnings as my career takes? This is really situationally dependent. And as I mentioned earlier, I'm no financial advisor. But as an example, if you did have credit card debt or a car loan, or just simply not a lot of money in the bank, you're probably better off paying off those loans first. Now that the indexation rate has been capped to the lower of the two, the WPI or the CPI, and current interest rates are high, if you have a reasonable amount in the bank versus on your total loan amount, you're probably making more from the interest than the indexation is going up on your loan. In my situation, indexation was pegged at 7% last year, before the notion of the wage price index and the lower of the two. And the interest rate on a savings account was around 2 to 3% at best. I was in a position to put $9,000 towards my loan, changing my balance from about $15,000 to $6,000, and I was able to save $630 on indexation cost as I paid this amount prior to the June 2023 indexation rise. And then after I completed my tax return for that year, a sum of my tax that was already withheld went towards the rest of the loan, and then I paid the rest off before the 2024 indexation date to save a bit more money and get some of the tax withheld throughout the financial year on my tax return. If you want to check your current balance, log into MyGov, select Australian Taxation Office, and scroll down to Loan Account, where you should see Higher Education Loan Program with a balance. You can click on this to see the transaction history, including repayments and when a subject cost is added to your loan. So is university worth it in the end? It might be invaluable for you to learn about something that you love. It might be invaluable to your loved ones to prove to them and the world that you're educated in a particular topic. It might be a necessary evil to get into a particular job or field. It might help you expedite your career growth once you have entered an industry. It could also lead to more job opportunities in the long term, promotions or advancements. You could be an investment banker or doctor on starting salaries of 6 figures, whilst also having a reasonable or large debt that kind of balances it out, with the prospect of reaching 200,000 in the next decade of career growth. At the same time, you might end up in thousands of debt, even up to $100,000 in some cases. Then realize that you owe the government enough money to buy a Tesla, and you're going to spend the next decade of your life paying it off while it's slowly going up. And to top it off, you might have quit before graduating or chose a degree with a low prospect of employment. It also might not be the best play for your long-term goals and financial aspirations. Starting a degree later in your life might just impede your borrowing capacity if you and your partner are obtaining a mortgage in the near future. There are many well-paying jobs that don't require a university or even a TAFE education. You could work in a sales-based role which is heavily commission dependent, and in this case you can make more than a professional with a degree depending on your performance, and also you wouldn't have any debt. This is something that you need to make the call on depending on what you want out of life and what's important to you. In saying that, it might sound like one of the biggest decisions that you'll make in your life, and it can be, but plenty of people have made a mistake and realized later on and they've been okay. It's important to be well thought out on this, but also know it's not going to be dire. Thank you for watching. Hope you learned something. Please share this with someone you know that might be contemplating studying, is studying, or is in the workforce paying off their loan, and would like to know more. I'll be uploading more content here on YouTube from an array of topics that can benefit a lot of people out there, not just people considering university. So please subscribe and click the bell to be notified of my next release. Even a like on this video would be greatly appreciated if you took something away from it. Until next time, stay informed.